So welcome back. And as I said, this is now the final stretch of the day, but by no means the least, because we're going to maybe not tackle, but at least open discussion on another extremely topical aspect, AI, and AI in the context of tax systems. What kind of challenges are we facing? What kind of opportunities are ahead of us? And what kind of risks are, of course, attached to those opportunities? Because one doesn't go without the other. So to open and lead that discussion, it's my pleasure to hand over to Rebecca Christie, Bruegel Senior Fellow.
Hello, everyone. Thank you very much for sticking around for this afternoon panel. We are going to talk about artificial intelligence and how the computers can enter into our tax domain. There are two main ways this can happen. One is by aiding and assisting existing tax folks with their compliance, with stamping out tax evasion and looking for ways to get more people into the system doing what they're supposed to do. And of course, the other way that AI usually comes up in is where can it stand in for human beings? Where can it replace people? Should it be subject to digital services taxes or robot taxation, taxation for machines that replace labor? How does it fit into the grand scheme? So these are the two different directions from which we'll be approaching. We'll be covering this and all sorts of other ground, and we'll very much welcome your comments and questions. We have a super panel today. We have, who will be starting off in a moment, Ferenc Vágujhelyi, who is the Commissioner for the Hungarian Tax and Customs Administration. Chloe Fox from PwC, Vikram Chand from the University of Lausanne, Daniel Waldenström, who is a professor of industrial economics at the Economics Research Institute, and Gemma Galdón-Clavell from Eticas Consulting. So we have a wide range of expertise up here, and without further ado, I'm going to let them start talking about what parts of AI and taxes are important from where they sit, and then we'll put it all together. Ferenc.
Thank you very much. The first question when we want to deal with AI is what are the preliminaries? The first preliminary is that we need data, first of all. I'm talking about the law enforcement part of AI because of my job. But what do I mean by data? These are not aggregated tax returns. They are more or less useless. They can be used for statistical analysis, but not for behavior analysis, not for fraud detection. So the first one is the data, transaction level data, like invoices, online cash register receipts, customs data, or payroll records, and so on. And the second is that we need AI methods that can be set up in machine learning models to tackle tax fraud. What can we do if we have both? The problem is that we can do nothing with our old-style tax audit procedures. Let's look at an AI analysis when you got 10 fraudulent companies. It's not a problem. But what if there are 100,000 fraudulent companies, possibly, because these are probable methods, possible fraudulent companies, you cannot release 100,000 tax audit letters. So we need tailored administrative procedures to use the result of our AI machine learning outputs. In Hungary, we initiated from the 1st of January the so-called data reconciliation procedure, which means that without a human touch, if we see any deviancy, data integrity failure in the data of the taxpayer, then the computer generates a letter. It is uploaded to the storage, official storage of the taxpayer, and they have to reconcile the data. We don't know what 99% does it. 99%. We don't know what we would do if only 50% would do it. So I think when we are talking about AI, we are not allowed to focus just on the mathematical background, on the legal background, but the administrative procedures as well. The second one is that we have to manage on some way the data protection issues. The EU has a great data protection regulation for natural persons, the GDPR. But we don't have any regulation or any even consensus. We don't have a consensus how to handle the commercial secrets of the companies. The tax secrets or custom secrets is more or less covered, but the tax secrets. So we should initiate an agreement on it, because if we don't do it, and the VIDA will take into force in 2030, and for domestic invoices in 2035, we should agree on bilateral basis data protection rules. That means it's a handshake problem for 27 member states. You cannot do it. It's 27 times 26 above 2. So it's a lot. It's 500, around 500, something like that. So we need a consolidated regulation for it. If we do not do it, nobody will decide, or nobody can decide who is responsible if there is any data leakage, and there is a loss for a company on that data leakage. So just for the initiation of the whole problem, I would say these sentences. Okay.
Super. Thank you very much for that overview. Vikram, how does it look to you?
Well, I'm just coming from the perspective of another topic, and you just touched upon that briefly. It's actually on taxation of AI and robots. Well, one of the biggest concerns that people have right now is that jobs are going to disappear because of AI and robots. And basically, because jobs disappear, there'll be less and less people paying individual income tax. And because robots and AI, they're not going to consume goods and services, well, basically, they're going to be lower VAT collections. So less income tax collections, less VAT collections from individuals. So there's been a lot of debate in many circles. Actually, Bill Gates, he came out with an idea, and he said, oh, we should tax AI and robots. Well, what is my take on that? Well, my take on that is basically the answer should be no. Firstly, why? The first reason I would like to say is because the policy justification on taxing AI and robots is not really crystallized. Now, if you look into economic data, actually studies published by many reputable institutions, you would yourself see that many institutions in the data, they have been saying that at one hand, jobs are going to disappear, the routine jobs are going to disappear, but at the same time, because of AI and robots, other jobs are going to be added in the economy. In fact, the most automated countries in Europe and outside Europe, they have the least levels of unemployment. So this basically gives us an indication that we shouldn't be taxing AI and robots. That's the first reason where the policy reasons are not really strong enough to justify such a taxation. The second is basically a tax on AI and robots conflicts with the existing policies that the European Union itself is trying to promote. For example, we heard from many speakers today that EU wants to promote research and development, innovation. And how is EU going to promote that? Through the form of tax credits, through the form of subsidies, and so on and so forth. So basically, if you start taxing AI and robots, what message are you going to send to businesses? It's a really conflicting message. On one hand, you innovate, and then whatever you innovate, we're going to tax you on that. So the second reason why we shouldn't be taxing AI and robots is basically because it conflicts with the other existing policies. The third, more from a technical design standpoint. From a technical design standpoint, any system which tries to tax AI and robots In that system, we need to define the concept of AI and robots. I mean, we can have a very endless, useless discussion on this. So what is an AI and robot? Like, for example, in my own house, I'm using a Thermomix. And, you know, a lot of people are telling me the Thermomix is an AI and robot. And probably we need to have me paying taxes on my Thermomix, which I'm using to cook food in my own house. So from a practical standpoint, it doesn't really make sense to come up with a system. And it's going to be very complex. And a lot of speakers in the previous session, they've been talking about simplicity. And, you know, if you design a system on taxing AI and robots, there's nothing simple about it. It's a very complicated system. I mean, if ever there's a big issue on AI and robots taking over jobs, probably then you need to go back to individual income tax, you need to go back to corporate income tax, and then you can have your rich individuals or the top companies paying something known as an education tax. I mean, we can learn some lessons outside from countries outside the European Union. For example, India has an education tax, Brazil has some kind of education tax, and companies and individuals are happy to pay that tax because that money is an earmarked tax and it's going to be used for educating people so that they can actually learn the new skill sets that are required in the job market. So basically, I mean, my perspective is we shouldn't be taxing AI and robots. But then so, you know, in the other panels, we've also heard that the EU needs to raise a lot of money for meeting its defense spending, for meeting its public infrastructure spending, so on and so forth. So what should the focus be on? What should people really think about? Well, I think people need to think about is on filling the existing tax gaps, as was said by the commissioner in the morning, and actually ensure the completion of existing projects. Now, in the VAT field, like my colleague just mentioned, you have the VIDA, and that's a very good project. I mean, that's a very nice project, and that can actually help raise a lot of revenues from the indirect tax standpoint. But when we come then to the international corporate tax side, I mean, there is an elephant in the room which nobody spoke about in the previous panels, and that's transfer pricing. I mean, just to give you some numbers.
4 minutes are up.
All right, sorry. I'll come back to that.
That's
all right.
a whole other
Perfect.
seminar. We here in the room can actually laugh at these sorts of jokes because we know what transfer pricing is. In the economic literature on robot taxation, one of the things that comes up is that as a long-term revenue raiser, it's a non-starter, but that there may be room for transitional taxes, particularly to help workers who are pushed out as things automate, help them reskill. Chloe, are there tax workers who are going to get pushed out by AI, or is AI standing in for a workforce that isn't there so much?
It's a great question. Thanks, Rebecca. I mean, from a tax point of view, I mean, I'm a tax advisor, right? So traditionally, our business has involved the selling of tax expertise. So I suppose where we see AI coming into play is not replacing us, hopefully, but rather, I suppose, increasing the quality of the work that we can do and ultimately increasing the quality of the advice that we can give, generating better insights that can ultimately help businesses in terms of pulling together a better overall tax strategy. So I don't necessarily see it replacing certainly, hopefully not tax advisors, but I suppose from a wider tax function for businesses, like that's probably more where the question needs to be had. How can AI support, or what challenges are associated with the use of AI for tax functions in businesses? At the moment, I think businesses are scratching the surface in terms of exploring. Obviously, we've got, lots of clients we see in PwC that are what we would call experimenters. Okay, so they're kind of getting to grips with the new tools. They are, figuring out what their use cases are, and slowly but surely they're trying to move towards application. So we would see a lot of businesses in that kind of cause. I suppose, what are they using it for? Ultimately, at the moment, it's data analysis. So clients are, and businesses, I should say, are, more and more, a lot of the tax, especially the tax compliance parts of the tax function, it all revolves around data. Pillar 2 is a prime example. So every entity that's in scope for Pillar 2, you need at least 330 pieces of data per entity. It just scales up enormously. So data analysis is obviously the big it's the big use case at the moment. But there's other use cases for use in tax audits, for example. We see, I suppose, businesses seeing a huge increase in terms of tax inquiries from tax administrations, and some of those can lead to disputes, or they can lead to audit activity. And we would certainly see that the tax leaders see a huge role for AI to play in that sense. So again, we've seen that 90% of businesses that we recently surveyed have said that they see AI playing a positive role in terms of tax audits. So there's loads of use cases out there. I don't think that it's going to replace the tax function of businesses. I think, again, hopefully what it will do is free up the tax function to do some of the more complex work, particularly around dealing with new legislation like Pillar 2, ESG reporting, managing DSTs, tariffs, so on and so forth. And then hopefully where we would love to get to is for the tax function to be able to play a more strategic role in the business, because tax is more and more important these days. We know that the board of companies want to talk about tax. We know the C-suite wants to talk about tax, especially in this, kind of tariff environment that we're in at the moment. So yeah, we would see businesses ultimately where I think they would like to use it, rather than just data analysis, is being able to take the tax strategy to the board and getting more and more involved in strategic decision making.
Thanks for that. Daniel, what do you think?
Thank you, Rebecca. Thanks for inviting me, and hello everybody. I come from research, economics research, and to discuss the question about AI and taxation and the future. It's associated with uncertainty. What is it? What is it going to be? And what do we think about economists making forecasts? Unfortunately, they're not very good at it. So maybe also looking at past experiences of technological changes, maybe at the same level as the AI transformation. In fact, we've gone through several of them. And I will go through now some of them, but I will also then focus on three important dimensions. One is how these technological changes have impacted growth and prosperity. The second one would be distributional outcomes. So some of the distributional outcomes are some of what we already heard discussed very much in this meeting. And finally, what are the policy lessons out of this? So technical change and growth. Is there a combination? Is there a link? Well, I think we can just look around in this room. We see that it's obviously a link. We've never been as wealthy and prosperous as we are today, thanks to technological change and development. So what this has brought up with us is an insight of, if anything, to adopt new technologies, to think that this is something that can lift all of society. I think that's a key lesson. I think also that's going to be very important to think about when we talk about taxation. So instead of just talking about fraud, avoidance, cheating, and so on, we should think about investment, innovation, and finding opportunities. So when it comes to not the economic size of the pie, but the division of the pie, namely the distributional outcomes, I think there are three dimensions that people typically talk about. First, is this the end of labor? I think this is something that people have staggering in their mind all along. Will we be useless as workers? In fact, the fears of technological unemployment are not new. John Maynard Keynes talked about this vividly, but also people from the 19th century and even 18th century were very frightened about this replacement of labor for machines. And I think we can look at unemployment levels today and compare them with 40 years ago or 100 years ago. They're roughly the same. We don't see any secular increase in technological unemployment in our economies. What about labor shares of national income? So that's another measure of how we are affected. In fact, looking at the data, we are at roughly the same levels today as we were in the 1960s. It's almost trendless. So, and this is particularly true for the cases when we have, when we take into account the depreciation of capital, so the technological aging of capital, and that has actually doubled in size over the past 40 years. And this is something that hits capital owners, but not so much laborers. So even there, so I think that in consensus, I think this is not the end of labor when it comes to many of these technological breakthroughs, not even over the last 3 decades where we have had quite strong automation trends in many Western economies. So market concentration is another distributional outcome that people talk about. Should we be afraid of that? Well, of course, we should always look into this. Interestingly, technical change episodes are typically associated with dynamism. Replacement of old technologies, old firms by newcomers. providing new products and new sources, new innovations. So, and this not to say the perspectives of the global south, which can be a huge dynamic force. And finally, in terms of the distributional outcomes, is wage gaps in the labor market. And here, preliminary evidence, we don't know much about AI, but evidence from MIT showing if we provide high-skill and low-skill laborers with AI platforms, what happens? Well, preliminarily, we see that everybody becomes more productive, but those who become the most productive and experience the largest increases are actually the low-skilled workers. So there are actually opportunities even here for AI to lift the bottom and alongside making the economic pie both larger and also more equally distributed. So I will come back then to the policy lessons, but this is just a starting point for where we're going to head today.
Thanks for that. Gemma, you come at this from the AI side. What do you make of it all?
Thank you. What an interesting panel and what a challenge for me. I'm a CEO. I'm in the private sector. We do consulting on artificial intelligence, and we also incubate a software startup that builds software to audit AI systems. And so for the last 10 years, we've been inspecting AI systems implemented in the private and the public sector, looking at how AI actually works. And one of the problems that we've often see, and one of the things that I've been missing today in the conversations, is when are we going to talk about the technical specifications? Because that's what governments and tax offices or any kind of office trying to automate is going to have to face at some point. So how do we implement that? What can it do? And unfortunately, today, both the public and the private sector, when they come to us, their idea of AI has been shaped a lot more by the science fiction narratives around technology than by a real understanding of how AI works. And so often the expectations on what AI can deliver are way too high, and there's a tendency to minimize the risks or not see them or not plan for them. Most people, when they come to us, they expect huge savings after implementing those systems, and that's not what we see in the short or medium term. There's also a minimization of risk, the hallucination problem. There's a lot of tax offices implementing chatbots to facilitate the interaction with taxpayers. In the best case scenario, LLMs, chatbots, fail 20% of the times. Can you afford to give false tax information 20% of the times? What are the liability consequences of that? And there's not enough awareness of those issues and how to address them. Also in Europe, we work all over the world, most of our clients in the US and Europe. In Europe, there's a problem with the dependency on solutions from abroad. Our clients in the US tend to have a lot more options in terms of what kind of technology to incorporate. Here, the scope of available solutions is quite limited and usually comes from the main developers of technology, which is also a huge challenge for the organizations that we work with. There's also often a tendency of underestimating the organizational change that comes with automation. If you don't have quality data, if you don't have standards for that data, if you don't have interoperable data, and if you don't have people trained to build data in accordance with the technical specifications of the AI system that you want to implement, then your system basically will not work. And people often think we'll just implement this system here and everything's going to be great, and then 3 months down the line I'll be able to fire 50% of the workforce that I have, or increase my service rates by a lot just by buying this technology. And that's not how AI works. So I really think that we need more of a conversation on the technical specifications and more of a role from public authorities in defining the data standards. I think that in Europe we have a lot of common regulation. There's been a lot of steps that have been taken to define a common data space, but there's still a lot missing as to what are the data standards that any EU entity developing AI needs to abide by. what are the interoperability requirements between systems, so that when we want to do European tax policy, we can tap into those systems, we can tap into that data, and we can make sure that we can maximize the data that we already have. Right now, what we have is thousands of data, mini data lakes that cannot talk to one another, that cannot be plugged into any other systems. And that's just like having a lot of people speaking different languages without anyone thinking at some point we need to speak the same language. And that's a space for policymaking that is often not given the importance that it requires. That is what central entities like the European Union, Parliament, Commission can do. Tell member states, these are the data standards that at least your systems need to abide by, so that we can actually do EU policy regarding taxation or anything else. And I have a lot more examples and things to share, but we have plenty of time to talk about them.
But for the second round, I want to ask you about something you said early on. You said you build software to audit AI systems. So where is the human in the loop? Or are you building AI to audit AI?
So that's I could talk about this for a long time. Where's the human in the loop? You know, Europe has put so much emphasis on the human in the loop, like this idea that if only we have a human being, then the decision's going to be fine. Like, we can automate 90%, but then let's have a human in the 5%, and the human's going to be this like super trustworthy, trained individual who's going to make the best decision. That's not what we find. When we audit AI systems, we audit both the technical and the human side, and we often find really problematic AI systems where the humans in the loop make the problem worse. So we have audited systems where we've been able to debias, for instance, an AI system, and then when the human in the loop intervenes, they reintroduce their own bias into the data sets. So just having a human is not a guarantee unless you train them, unless they have an understanding of how the system works, and unless they have incentives and liability in making that decision. We have audited systems where humans just feel, my job is to press enter. That's just, you know, the system just told me this is the outcome. This person has committed tax evasion. Well, if the system says so, that must be right. As humans, we have one thing called automation bias. Right now, I think that's going to change over time. But today, we trust AI systems more than we trust humans. So if an AI system says someone's a fraudster, we're more likely to believe it and then just press enter. Yes, of course, the system cannot be wrong. So again, there's a lot of problems with the human in the loop in practice. That's why we need to move from the principles. So we want a human in the loop because we want these systems to work well, to what are the practices? How do we make sure that the human in the loop actually plays an accountable, robust role in making those systems better? Because today, that's not what's happening.
Thanks for that. And that's a great lead into my follow-up for Daniel, which is you were talking about economic forecasting. And we see that when AI is asked to make economic forecasts, they look beautiful and plausible because they are in fact scrambled forecasts of things that have already happened rather than truly forward-looking dynamic forecasting. So how do we get to the future?
So we don't know yet. We can just experiment, and I think in terms of the policy lessons from this discussion, I think we should use the taxes not to impede too much this experimentation, this learning of what has worked and what does not work. And I think in general, should we raise or cut taxes? Well, theory doesn't really tell us explicitly, but we can just see that Europe today is in the global top of taxation, both in general levels, but also in marginal tax rate. So in terms of trying to incentivize people to experiment, to improve on AI, I think the lesson is that we should go, if anything, towards lower taxes and to also embrace other kinds of tax mixes to really provide better learning processes and so on. I think this is the kind of how to think about what kinds of taxes. So we should, for example, think about capital taxation. We talked about this, but I think we should then focus on capital taxes that actually are based on actual incomes. Those who own the robots and the bots and so on, they don't have so much profits. Many of them are new companies, maybe highly valued, and then would be liable to a wealth tax that has been discussed previously today. But there are no profits, no incomes. So we will have liquidity problems, and not just mentioning the valuation problems. So Europe needs to pick up on better taxation, better tax procedures to incentivize and to promote AI investments and AI experimentation. I think this would be the top priority and the top lesson from linking or discussing AI and taxation from the economics perspective.
It's a great point, and it shows how complicated it is to do that, because you've got EU rules on capital markets, you've got national rules on taxation, plus you have many of the other national concerns that you mentioned before, Ferenc. I was going to ask you about if taxing AI is different from taxing other types of services, because you mentioned VAT earlier, and that's something I've been thinking about. But if you'd rather, or in addition, you'd like to respond to these broader policy questions, I'd love to hear what you have to say.
The tax authority does not create the taxation rules, but enforce them. But originally I'm a mathematician, so I have a strong opinion on it, and I can share it. The AI is, on one side, very democratic. You can use the AI services from anywhere in the world, or nearly anywhere in the world. But on the other side, it's very much centralized, because there are very few service providers who gives you real advantage when using the service. And it's a huge problem. For example, if I want to judge my own system using AI, and I refer back to the audit of AI systems. The problem is that I will reveal my developments for Microsoft or DeepSeek, the Chinese companies, and I cannot do it. We definitely needed a domestic European solution. It's a serious problem. We are now in the phase that we are building large language models. That's where the Americans and Chinese were a decade ago. And if you use any other kind of IT services that is belonging to any kind of cloud, and now you can only buy services when there is a cloud solution behind. You are going out of Europe. Maybe physically not, but logically there will be a data center that is not under European control. You can be sure of that. And back to taxation. When you are doing a business, there are 100-year-old rules, how to do your bookkeeping, how to release your invoices. We are talking about that taxation is on national level in the EU. It's not fully true. For example, the VAT is regulated by an EU directive. So I think we can use those rules. So we don't have to, a tax authority don't have to think on who created the added value. The prompter who prompted the AI engine or the service. We don't mind. Anybody who releases an invoice, we will collect the VAT, if it's a domestic invoice, of course, and all the consequential public burdens, taxes and excises that belongs to that activity. So we do that. But I don't tell you that this question is not a real question for the politics, but not for the law enforcement.
Thanks for that. Chloe, we've heard a lot of comments about data, so I'd love to hear your thoughts on collecting it, using it, regulating it. How does that work for you in the real world?
Yeah, again, a great question. It's certainly a challenge, absolutely. I think from the tax function point of view, one of the main challenges we have around data is that essentially sometimes what we get from the finance team can feel a little bit like last night's leftover dinner. It's a little bit cold, it's a little bit limp, it's not really what we're looking for. So what we often have to do is have to work a bit of magic to make it work from a tax point of view. So whether or not that's transforming it into data that's, good enough for compliance purposes, or data that's ready to feed into an AI tool, or for example, data that will ultimately be, good enough and accurate enough to feed into a global information return for Pillar 2. That's really important. So I suppose when it comes to the data challenge, there's lots that we can do, I think, to try and make some improvements in terms of taking it from the finance data to making it more tax appropriate. I think things like better tagging is something we can do, better, I suppose, clarification of what the ultimate purpose of the data is. There's lots of positives that we can do in the data sphere. And I think tax functions are already kind of on board for that, and they're already taking concrete steps to make that happen.
Do you see any particular places where machine learning or automated learning might speed up the process or might be especially risky?
Yeah, and actually I have a kind of really good example, oddly enough, around Pillar 2. So we've done a little bit of work around trying to make Pillar 2 a bit more simple, right? So one of the things we've kind of realised that, there's not actually that much legislation around Pillar 2. You've got your model rules, you've got your guidance, you've got your kind of local implementation, maybe a little bit of local guidance. But essentially, there's not really that much out there. And that kind of suits an AI model, because if you're able to take a limited number of data points and you're able to bring them together, assimilate the rules effectively, it's much easier to teach a machine how to actually use that information and apply it to an accurate data set. So something that we have found really useful is being able to bring together all of the different Pillar 2 rules. And again, something really simple, like a lot of those are in different languages. So AI is brilliant at just translating it back to, English or whatever the home language is. And then what you can do is when you have an accurate, I suppose, bank of information that has all the rules and you have your data set, you can bring the two together and then you can really interrogate, what is the rule and how does it apply to my particular piece of data. So I think that's a really good example. There's absolutely loads as well out there, but I think from Pillar 2, it's a really interesting example because it just works particularly well because it's a smaller data set, I guess.
Excellent. Vikram, you want to talk about data, or you want to come back to transfer pricing?
No.
You can choose.
I'll come back to transfer pricing because I think people need to know this. This is one area of tax law where you can have a lot of automation. So taxpayers can actually come up with AI solutions where our taxpayers can use AI solutions to basically make the master files, local files, and all the documentation around transfer pricing. And actually, tax administrations can actually use AI to do proper tax audits in relation to transfer pricing. Now, just to give you some numbers in terms of transfer pricing disputes and how much transfer pricing revenues can actually a government collect. Right now, Microsoft is publicly available. This information, what I'm going to tell you, they're going through an audit in the US. I think it's a transfer pricing issue in relation to the intangible property. The amount at stake is $27 billion. Coca-Cola just finished a tax audit, there's still litigation going on. The amount in dispute is $6 billion. In the EU, there was a very big case, the Apple case, which the Commission won, and I should congratulate them for that. Basically, there also the amount at stake was 13 billion, and at the court, there was an issue on transfer pricing. So, one area where governments can really collect a lot of money from multinational taxpayers is by doing proper transfer pricing principle-based audits. And I think a lot of governments need to invest in that area. There's a lot of training which already a lot of tax administrations undergo, but we need to up the game in the area of transfer pricing because that's a very subjective area. And actually AI can actually help governments to raise a lot of revenue in that space.
Thank you for that. If we have questions from the floor, maybe start bringing them up. And while those are being collected, if there are any, I have a question for the whole panel, which is, what would you see is the risk of an arms race between AI tax enforcement and AI tax cheating? Daniel, yes.
I can just say that I think when hearing discussions earlier today as well, I think the European perspective has a problem. I think we have been too much focused on cheating, the problems. We talk about cryptocurrency as something threatening, blockchain technology, we don't know what it is. Looking at the data, Europe is far behind these new technologies. And this is something which is going to hurt us, because AI has fantastic productivity gains and prospects. I think we should switch the mindset. And for example, when it comes to talks about tax collaboration and cooperation, if I want to throw in some crackers in the fire, I think most of the time we talk about competition as something good. So we tend to like competition, but not for taxation between countries. We can have tax competition between municipalities. There are data or research on that showing that it improves service provision in municipalities when they compete on the tax bills. But why shouldn't countries also be able to compete, and we can generate gains from that? So basically, taxation is just one aspect. You have to provide also rule of law and a stable environment and so on, and educated labor force. Imagine doing that for a cheaper tax bill. So that's an incentive for a country to actually tax less and still be forced to provide the same public good. So in that sense, I think tax competition could actually be something that we should not at all just rule out unreflectedly. And it has a kind of link to how we want to also promote AI, much more open-ended and promote the growth prospect, because that will also lift the bottom, all those who get the jobs and also are financed by the tax money coming out of the profits and incomes that is produced.
Excellent. Anyone else?
Yes, just on, because we are talking about AI and robots, a lot of multinationals, they actually make a lot of profits from actually selling AI solutions and robotic solutions, so on and so forth. Okay. And right now, there's no way a lot of market countries can tax all these remote sales made by these multinationals, and that's why the Pillar 1 Amount A project is a really important project. And currently, that's actually the best solution out there. We've analyzed all the solutions from an academic standpoint, and the best solution is this Pillar 1 Amount A solution. Where I think the solution can be made a bit better is just dropping down the threshold from 20 billion turnover, so the in-scope companies are reduced from the big ones, and you just have the same Pillar 2 threshold, which also applies for Pillar 1 purposes. I think that could be a good idea. And the second is we just need to get one large country on board on this project. We've already heard that's not possible. But what we can do is we can learn from the Pillar 1 Amount A project, and actually we can come up with some new concepts on digital peace, significant economic presence. Actually, within the EU Commission, they had launched a directive on significant economic presence, significant digital presence. So basically, these ideas need to come back, and the profit allocation mechanisms with respect to, ensuring the more profits are collected or more profits are taxed in the EU, that can be done through a deemed formula, and we can, leverage on the formula which has been built in an Amount A context.
Super, thanks. Yes.
Could I just maybe remove my CEO hat for a second and intervene on this issue as an EU citizen, I guess. I'm from the EU, but I'm based in the US. Eticas as a software startup is in the US. We've raised rounds of funding in the US. I'm one of those paper millionaires based on the valuation of the company. But I'm European, and I am very surprised in the last few months at seeing how little value Europeans give to European values. There's been like a tendency to just say everything's wrong here. We're behind in innovation. We're behind in adapting to the new times. And I think that a lot of us that are abroad are immensely proud of the fact that Europe has managed to continue to wave the flag of values, of taxation, of fairness, equality. There's so much to be proud of. And I'm a bit scared that in this kind of race to the bottom, Europe will fall into many of the traps that the U.S. society specifically is falling into right now, and that make us all really, really scared, the ones of us who live there, and have to see every single day how things that were unthinkable not long ago today are realities. So I would really call on European representatives to be proud of what we have achieved, what Europe means to the world, and to continue to build in that direction. Yeah. Taxation is a good thing. Values are a good thing. Fairness is a good thing.
It's a really interesting point. I'm sorry, I'm getting.
I've just been hearing this all day, and I'm like, oh my God! I thought I was coming back to the place that still values those things, and I'm not seeing that. I think that many of the issues, the problems that we have to compete, is precisely because the EU tends to just copy the US model in terms of instead of building value on its own. We don't need European LLMs. LLMs are like the raw material. Let the Americans do that. Let them spend all the money on all those data centers. Build a top layer of value. Raw materials, raw LLMs fail a lot. They need to be adapted to specific use cases. Why not build an EU market that specializes on building the manufacturer on top of the raw materials? I think there's a lack of imagination sometimes and more pride in what has been achieved.
Okay, Ferenc.
I fully agree. With your approach, and it was very good to hear. But what is the message of the politics to the European people, the European politics and also national politics as well, to the people? If they hear the word data, then the first thing they connect to is data protection. If you hear anything about AI, then how we protect ourselves with AI. Think about the AI Act. I don't want to criticize the GDPR because I will protect it. I think it's a very good European regulation. But think about the AI Act. To be honest, AI Act is very good with the tax authorities. So it does not affect us very much. But, and the customs as well. If someone comes from the planet Mars and reads that regulation, then the message is that it's dangerous. You don't have to do this, you must not do this, and try to avoid it. How can we make our youngsters, technology yuppies, brave enough to invest into this technology, their knowledge, their money, when we are just building up corridors for them?
So a thing that both of you touched on is investments, and I hope we've about 45 minutes left in the panel. We don't want to go into a whole strategic autonomy diversion here, so those of you who are about to comment, keep that in mind. But it is also true that while you're saying these European values are great, you're going to the US because that's where the financing pools are. And you're talking about investment and where are the markets, where are the pools of financing? They're in the US. So to the extent we talk about AI and investment for the rest of the panel, maybe we can think about some of the barriers that keep the Capital Markets Union from going, and that sort of are these friction points between the EU aspirations and the way that these things are implemented at the national level. And that's my transition into questions from the audience. We have a bunch of questions, which is super exciting questions and comments. Those of you who know me from Bruegel know that I can be very strict about your 1 minute time frame. I'm going to be very strict about your 1 minute time frame. You can see the little counting red things to count yourself around. So please keep that in mind. We have our first comment, seat number 303 from Romania, Chamber of Deputies, Mihai Botez.
It's okay now. I think we should focus on what we can control. I think we should focus on having something, a good result as soon as possible. So that's why I think we should use artificial intelligence to help us be better, to be stronger, to be smarter. I think AI shouldn't replace humans. I think AI should enhance human capabilities. So that's why I think we have here a colleague earlier saying about a small business has put together information about taxation in all Europe. Why don't we do this now and make and help businesses thrive and do more business here in Europe with what we have now? I think we should focus on this. What's your opinion? Because the political decisions will come in 1 year, 2 years, or so.
Thank you for that. We now have a seat 107 from the Greek Parliament, Athanasios Kavadas.
Thank you very much. First of all, I'd like to congratulate the panel for this important and topical issue that we're discussing today, especially the whole issue of AI and tax systems. Ladies and gentlemen, the opportunities by including AI in tax administration the opportunities are huge, but there are also enormous risks and dangers in implementing this. And that is why we have to look at AI from different points of view, the technological one, economic one, sociological, legal and ethical. And we need to choose those contributions that help us boost the advantages and help us curtail the possible dangers. The tools given by IA help us make the most of resources and help taxpayers, help us analyze tax data and help us train new staff, new employees. But AI also includes many dangers, the lack of transparency, data security, the fact that people maybe trust administration less, electronic fraud, and so on. And I'm very pleased to hear that software that will audit AI, I think that this is news to many. So AI applications have to be developed rationally, in a transparent way, to make sure that we can really assess tax systems that are there to serve the taxpayer. I'm wondering whether when it comes to legislation and institutions, the EU and the member states are ready, whether they are prepared to implement AI systems, because they need to be ready to make sure that tax systems are efficient and effective, but they also need to make sure that there's proportionality and transparency in order to make sure that we're basically serving taxpayers. Thank you.
Thank you very much for that. That was 2 minutes. Further speakers, do not be emboldened. Stick to your one. I'm going to start interrupting people. From Sweden, we have Annika Hirvonen.
Thank you. First of all, on the topic of strategic autonomy, I think it's what most of us are occupied with these days. We are proud as Europeans. We stand firmly behind our values, and I think the last days we've done so together in a way that really has been important for our citizens, as well as the citizens of Ukraine, not the least. But I was wanting to ask you about what we can do when it comes to taxes. You were talking about not to put taxes on robots and on an AI, but if we want to encourage development in Europe, is there anything that you would see us do as politicians? And also a different question on legislation on AI models for detecting fraud that you brought up. There are biases in the models. We can see in Sweden. What are good examples of legislative measures to counteract these factors, or is there anything else we can do as decision makers? After all, our job is solving problems. That's why we're talking about them. Thank you.
Thank you. I would like to thank all three of our question askers for having questions, which is great, so I can turn it over to the panel. Who would like to take what? We've got a question from the Romanian colleague about just generally how do we prepare ourselves for the future, a question from the Greek colleague about how is the EU really going to get a handle on this, and then a question from Sweden of what we would like to see from the national parliaments, and is there anything effective on bias already? So pick and choose. Yes, if you can keep your answers, all of you, by the way, short, under 2 minutes, that'll let us. We have more questions. Yay!
All right. So just on taxing AI and robots, I'm not a big fan of that. And I guess a lot of people are not big fans of that because we want to encourage innovation. But at the same time, what can governments do to ensure that sufficient revenues are collected from taxpayers? So I completely agree. As individuals, as companies, everyone needs to pay their fair share of taxes. But the debate we need to have is whether or not we have the right policies to ensure that everyone is paying the fair share of taxes. So in the context of international corporate taxation or taxing corporations in general, I think the focus, at least from my point of view, needs to be on transfer pricing, because that's one area which can lead to significant revenues for all European member states. So in the EU, there was a forum, the European Joint Transfer Pricing Forum, that was kind of dismantled. I think a similar forum like that needs to be set up, and where a lot of tax auditors can do a lot of training on transfer pricing to ensure that more profits are being allocated to their own countries and they actually collect taxes. So that's in the area of international corporate taxation. In the context of international individual taxation and taxing individuals, one of the big debates that took place here is having a wealth tax on the super rich. Whether that's a good idea, personal view, no. It's not a great idea, because individuals are just going to go away from one country to another country. But where I think a lot of work can be done, and actually, a lot of high net worth individuals, just to let you know, they're not owning the shares of companies directly in their own name. They always use trusts, they always use foundations, they always use personal holding companies, so on and so forth, and similar arrangements. So the crackdown, or if you really want to do some policing there, the policing needs to be done at the level of having stricter anti-avoidance rules or anti-evasion tools for trusts, foundations, and similar arrangements. Because all high net worth individuals are using that. No one's holding shares or 2 billion stock in their own name. No one's doing that.
Maybe we can have AI.
Exactly. And actually, the AI can help in that.
Exactly. Perhaps. We will see. Chloe, what do you think?
Yeah, I think the three questions actually have one very similar theme for me, and that can be summed up in one word: upskilling. I think upskilling is really what we have to do at the moment. So we know within tax functions, and also just more broadly, we are facing huge skills gaps in the EU, and it's really causing problems in terms of our ability to innovate, our ability to be more productive. For example, we recently did a survey in PwC where we found that within tax functions, tax leaders are telling us that 95% of the tax leaders are telling us that they have a skills gap, right? So that's not too unexpected. But 55% of those tax leaders say that that is a significant skills gap. So that actually is really important. Where, I guess, is that skills gap, right? So in terms of the top skills that we're finding people need, it is number one, AI. And that's not just me saying it, that is coming from 1,200 tax leaders across the world. The second, I suppose, from a tax function, unsurprisingly, they want specialised tax skills. But the third then is data analysis. So you've got AI skills and data analysis skills being the first and third most important skills going forward. So that really tells us all we need to know. And that can be replicated across, not just within tax functions, but across businesses, across industries. So I suppose maybe to kind of answer the first and third questions, what can we do now? Well, we can invest in upskilling on AI. We can make sure that our third level institutions are attracting enough candidates from a STEM perspective, making sure that we're opening up courses like, AI development to as broad a pool of potential students as possible. I think upskilling is super important, but as well people that are already in employment, particularly if there's a risk that your job may not benefit from AI, because there will be a number of jobs that will not see an AI dividend. So we need to make sure that people are empowered as much as possible to, upskill themselves, future-proof themselves, because we basically need to make sure that the EU workforce does not become equivalent to the dinosaurs that we had dinner with last night. So I think that's really, really important. So I suppose my answer is just upskilling is the most important thing for me. And tax policy can be a super tool in terms of that, in terms of encouraging investment. I just think that there's so much that could be done there in the round of tax policy.
I like that idea of upskilling people before they get laid off instead of waiting till they're unemployed. Ferenc, what you got?
I think the risks of using machine learning is overestimated in taxation. And I'm sure of it because there are two kinds of output of the AI or data science methods. The first one is the data integrity problem. That's the hard logic. If you release an invoice in a period and for the same period you declare zero VAT, then there is a definite problem between your data reports. So that's one point. This is the so-called good old-fashioned AI, the predicate calculus. And the second one is the machine learning, the deep learning methods, when there is a probability that you are classified fraudster or not. But you never base your administrative decision on probability. So maybe the method is biased, but the decision will be not biased based on it. Of course, we have to avoid the risk analysis, and we have to avoid the selection of mixed selection of taxpayers just because the machine learning method is biased. So I fully agree. But the biggest hurt that the administrative decision is bad, if there is an error, it cannot happen on this way.
Thanks very much. Daniel.
So thank you. I was happy to hear from my Swedish compatriot on the questions of what we can do in our respective countries. I think Sweden is actually a good example of focusing on income protection for individuals. Those who are exposed by the transitions and maybe losing their jobs because of AI even, we want to support them. And this is also to gain support, political support for further AI improvement. So this is key, so that we have a social protection. And here, we're pretty good in Europe. I think, in fact, we're the best in the world on having these universal schemes that protect us from negative income shocks. And there's not so much for us to learn from that. In fact, I think here, what we instead can learn from is how to improve our effectiveness. So how to break the secular stagnation trends, how to go from having unemployment rates far beyond 5%, maybe 10% in many countries, and even further up. So that's those are the social values. I totally respect what Gemma said about Europe having a lot to contribute to the world. But I'm sure that I can assure you that we will have 40+ tax to GDP ratios in many years to come in these economies. So it will not be a race to the bottom, which anytime soon. And that's one part of the problem. We are slow, and we're maybe too slow in adapting, and actually this is going to hurt people who are unemployed and who are not being able to re-educate and actually, or taking jobs in new startups and new companies that we have not been good enough on. So that, I think, is so social protection for those who are exposed and who are negatively affected by the transition, and then increased carrots to have more companies providing more jobs and more growth.
Bias is one of the main challenges in AI, and it's not a bug, it's a feature. Bias is like the equivalent of speed in cars. Cars are made to go fast. That's what we want them to do. But we realize that there's such thing as too fast, and then we build brakes and red lights. In AI, bias is the same. Bias is a feature. All AI systems are biased because of the pattern dynamic. The way that AI works, it identifies majority patterns at the expense of minority patterns, and so minority patterns in any data set will always suffer. So it's always there, and you always have to control for it. That's what the US doesn't do, and that's what Europe has an opportunity to do, to build the tools, even software tools, that allow us to build systems that minimize bias and build the equivalent of the brakes for a car, or the seat belts for a car, or the red lights for a car. So bias is a huge problem that we face in any single system that we implement everywhere, from cancer screening to fraud identification in tax systems to any kind to allocating students to specific universities. It's a problem that we have throughout. On the issue of what can policymakers do, because I think that that's really important in this forum, I'd say on the one hand, use procurement as a tool to shape the market. And I would encourage you to look to the US, but not to the federal government right now, but to states like California and Colorado that are trying to compensate for what the federal government is doing, and where they're looking at ways of how can we as the public sector ensure that the AI that gets to our citizens and the AI that we use as public administration is responsible AI. And so through procurement, we build rules to ensure that we only buy technology from providers that can guarantee that they will incorporate bias minimization, auditing of those systems, explainability of the decisions, and you can build all that in your procurement and only buy technology from developers that bring you that. And also the second thing that policymakers can do is put their money where their mouth is. And I feel that in Europe, that's what's missing. We did a study on the Horizon Europe program, which is the largest funder for R&D in Europe. The Horizon Europe program mentions responsible AI and ethics and societal issues several times. We used AI to identify how that was valued in the proposal phase and how much of the final money was allocated to the proposals that mentioned these topics. The results were really, really problematic. Ethics, responsibility, and societal issues are in the text of the calls. They're not in what is funded. So my feeling is that Europe is the first one to not believe in its own preaching. We are not investing in the things that we say we care about. When it comes to spending money, we end up investing in Silicon Valley wannabes 20 years later. And I think maybe the problem with the EU, it's more on that and not on our inability to innovate. And just one example. Do you know who monetized GDPR? The law that now everyone criticizes because it's so bad. You know who built a company that is valued at $5 billion today? OneTrust in the US. Not one single company in Europe monetized GDPR. Not one single euro of R&D money from the EU went to helping companies develop solutions for responsible AI or data protection. Maybe that is the gap, and maybe the opportunity is in that and in not in getting rid of data protection or responsible AI as paradigms of the innovation that we want Europe to put forward.
We look forward to the coming wave of corporate relocations to take advantage of all this expertise. We have 6 questions. So I will ask the sound folks to please turn my mic back on after a certain period of time to make it easier for me to interrupt you and keep you on task. Because we do want to hear from all of you, give our panelists a chance to respond, and make sure that Gerassimos and Pasquale have some interpreters left when they get up to close the conference. And I'm guessing the interpreters need to get out on time because that's a hard job that has not been automated or turned over to AI. So, first, in seat number 353, we have Thomas Gabory from Algonomia.
Hello, everybody. I'm the head of Digital Transformation Services. We currently help tax department using AI to generate tax documents translation and analysis to help them navigate regulations efficiently. We believe that it will increase efficiency and accuracy in this department, but we see now key risks emerging from that. The first one is transparency and trust. If AI models are proprietary or hidden, taxpayers cannot verify or challenge decisions. The second aspect is bias model. AI trained in incomplete data set may generate discrimination in tax enforcement. And the final one is technological gaps. If AI is controlled by few private firms or few governments, smaller businesses and some jurisdictions might fall behind. We believe that open source AI models can be the answer to such challenges. That's why we are pushing our code open source for researchers and policymakers and the public to improve and audit our automation tool. And more question regarding that is, should EU commit to sharing an open source AI tax algorithm? And what about requiring the same from all private AI software providers to ensure fairness and transparency? Thank you.
Thank you. Big question. Seat number 556, Eva Cartwright.
Thank you very much. I have a question to the whole panel, whether the panel sees an opportunity for AI in actual lawmaking. As much as we are proud of European legislative achievements, we are inundated with law. And the Draghi report points out that in the same period of Commission mandate, the US passed 3,500 legislative acts, while the European Union passed 13,000. And from implementation point of view, they're not particularly good either. So I'm asking whether AI could help us write better legislation, because currently we have the base legislation, we have implementing regulations, then we need a guidance, and then we need an FAQ, because the legislative text is not clear enough. So, in fact, from implementation point of view, we need to read thousands and thousands of pages, and from one company who is dealing, for example, with wine trade, it needs to read the tax legislation, the customs legislation, the excise legislation, and there is no correlation between those. And we see quite a lot of potential in using AI tools. We are using them ourselves as traders, and we are wondering whether the administration would be willing to move towards this, and if there are any challenges in this.
Ferenc, do you quickly want to talk about how this will work for you?
I think we can expect from an economic entity to manage thousands of pages of legislations if they want to build, for example, a nuclear power plant. But if there is a private person, it's a crime against the society if we create thousands of pages of legislative documents. It simply does not work. A whole economy is thriving on this and robbing out our citizens because we use a very unfamiliar wording and there is no consistency between the legislative units, let's say. Okay, I have to be in a hurry, so I think
that's good though, because she's working with actual customs people using the custom systems, and you run a custom system, so I think this is worth the time, and I appreciate both of you for the answers.
The EU made a good thing on customs for private persons, because the OSS and the IOSS system takes the burden from the private, the natural person, and takes all the administrative burden on the company, the electronic shop, the web shop, or the importer. Yeah. So it works on this way. I have a huge problems with this system. Gerassimos knows it very well, and I have a proposal how to go on with it. But regarding this question, it's a good system.
Thank you very much for that. We now have in seat 178, Christos Melas.
Thank you very much. Thank you very much for giving me the opportunity to be in this European temple of democracy. And I would like to warmly congratulate Gerassimos Thomas. Gerassimos Thomas, congratulations. This event is inching to a close, so I'd like to congratulate you and every single guest speaker. We had very interesting speeches and ideas, but I have a solution to put forward. And I'd also like to ask AI what solution it can provide. At the moment, we have a complex VAT system in the EU. Approximately 100 billion euro is the money that we're losing. So how about a proposal that makes sure that all VAT is collected, and so that we don't have these losses? And then we also need to look at the card system as well. Card sales I'm thinking about now. Let me give you a simple example. If you want to go and buy a shirt and pay 120 euro.
1 more minute.
If you go and buy a shirt and pay 120 euro, 20 euro goes to the state coffers and 100 goes to the businessman. But at the moment, it's the 120 that goes to the businessman. So I have a specific proposal. 100 should go to the businessman, to the company, and 20 should go to the state coffers. That's how it should be. So a question on AI. What can you do about this? We're talking about, is there something very simple that we can implement? Thank you very much. Thank you for giving me some extra time.
985, Mariano Giralt.
Thank you very much, Rebecca. So probably it's a follow-up point after our Greek colleagues. One of the topics that we have discussed across the session today, it has been the tax evasion. Has been named at least from 8 different speakers, the problem and how to tackle tax evasion. And it seems to me that all the challenges that we are facing on tax evasions are about the massive amount of data that we need to collect. It's about the predictions, it's about the patterns, the predictive patterns that we see in the industry for tax evasion. A little bit my observation, I'm keen to hear from the panel, is I know that we are doing some things in Europe. I know that there are other tax authorities, the US, Canada, Australia, the UK, they are quite heavily investing on AI for tax evasion. We are doing a little bit here in Europe. My question is, can we be a little bit more ambitious in doing things on tax evasion and AI? Thank you.
Seat number 609, Laura Maxon.
Thank you. Artificial intelligence in tax system relies on large-scale data processing, which demands significant energy consumption and has a notable environmental impact. How can the EU address these sustainability challenges without slowing down innovation? What strategies can potentially help optimize AI's energy efficiency in tax administration while maintaining its effectiveness? Thank you.
My undying gratitude. Thank you. Our last question from Fiaz Dosham, seat number 737.
Hello, everyone. Quick reflection on the, we're talking about the transfer price, Mr. Chant, you mentioned. And my question is more there, than we see on the other side, the WCO customs valuation is coming. And there is a big conflict. We see that, and how we can harmonize this. Thank you very much.
Thank you very much. So we will go back to our panelists. I'm going to do a little bit of divvying up. Gemma and Vikram, I would like you to consider open source. Should we mandate more open source as a way of keeping the technology widely available and leveling the playing field? We had a couple of questions from our Greek colleague and the other colleague about VAT fraud. And Chloe, I would love it if you can particularly talk about ways that perhaps in your business you see closing the tax gap. Ferenc, you know the issues. If there's anything you'd like to add on, what it's like to really do this, that would be great. Daniel, I will give you the floor last because you are so wonderful about some concise, big picture thoughts. So think about it. Be ready. Dealer's choice. And let's see. We'll start with open source because it came in first. All right. What do you think?
So let me be a bit provocative here. And my answer would be no. I don't think that we should make open source mandatory for several reasons. First, because a lot of the open source models today are not truly open source. They only open source part of the development, and there's no guarantee that after a system has been open source and the community has worked to improve it, it will not be privatized. And so I don't think it's a solution for many of the problems that we have. But also I think that we need to start thinking about AI systems from the perspective of the impacted communities and the people that have their livelihoods defined or decided by an AI system, and focus a lot less on the top of the stack and a lot more on the end of the pipeline. And so we can have open source models that are really bad for the environment or really bad in terms of how they make decisions. They may not have minimized for bias. So I do not think it's the solution to the issues that we have. I think it's good to encourage open sourcing as a layer of transparency, but open sourcing is not transparency. Open sourcing is not necessarily environmentally efficient. Open sourcing may lead to companies monetizing personal data because they cannot monetize the model. And open source that does not guarantee fairness at the point of impact. So it's a good thing to have, but it doesn't solve all the problems.
Thank you for that and for touching on the environmental angle, which I neglected to assign. So Vikram, if that interests you also, the floor is yours. You can pick and choose.
Well, on the environmental angle, I'll stick to that. Thank you for your answer. So on the environmental angle, you see, there is, as the Commissioner said in his opening statement, one of the top priorities here is the transition to net zero. How can you achieve transition to net zero? So you have one tool, which is your carbon taxes, where you can just increase carbon taxes on the airline industry, shipping industry, or other industries, and you raise more revenue. But that's not stopping companies from actually polluting. Companies still pollute. There is more pollution. So carbon taxes may not be the right answer to that problem. Where I think a good answer to that problem is more incentivizing companies to move towards the net zero transition. And how can companies be incentivized? Through what the Commissioner already said, through accelerated depreciation tax credits. And in fact, in the US, for enabling companies to move towards this transition to net zero, the US has come up with this Inflation Reduction Act, a lot of tax credits, and actually Canada has picked up on that. They've come up with 6 tax credits. Australia has picked up on that. They've come out with 2 tax credits, a critical minerals processing credit and a hydrogen production incentive. And France has also picked up on that, and they've come up with tax credits. So I think the mindset needs to be to stop penalizing businesses with more taxes and actually enabling businesses to move towards this transition towards net zero. And, just as an example for the airline industry, the airline industries, if they start using sustainable aviation fuel, then, there'll be less pollution from the airline industry. But that fuel is very costly right now. It's very expensive, the sustainable aviation fuel. So I think governments need to intervene there and actually kind of provide some incentives to businesses, the producers of sustainable aviation fuel, plus the consumers of sustainable aviation fuel, so that they can enable this transition to net zero. And then, there's more and more renewable energy in the market, and that renewable energy is used to power AI platforms and not coal anymore.
Super helpful. Thank you for that. Chloe.
Great, thank you. If I can, I'd like to pick up on the end of question 2 and kind of bring it into the question from the great colleague. So I suppose the overall question is, what can we use AI for in the sense of lawmaking, and specifically how can we use it to close the VAT gap? Okay, so there's a number of different things that we can do. Firstly, if we can bring together an idea of what is being done internationally in terms of best practices. AI is huge for that because it can help us to set the benchmarks. How are other countries, for example, dealing with shadow economies, dealing with VAT evasion, that kind of thing? I mean, Egypt is a great example. Like, they introduced a system a few years ago purposely to deal with the shadow economy. So they brought in a system to deal with e-receipts and e-invoicing, and it took out all of the kind of arbitrary, I suppose, decision-making out of the process. They saw a huge improvement in terms of compliance. So I think that's a great use case. I suppose a couple of other examples on the VAT side. Specifically, I think VIDA will help because we'll just get a lot more data, and I think tax administrations will be able to use that to figure out what's baseline behaviour, what is then unusual. So, for example, where may there be instances that might indicate that there are risk or evasion tendencies, I suppose. A couple of other examples, we can do all this a lot more quickly. And I suppose when it comes to an important tax like VAT, which is a fiduciary tax, and it's a huge mechanism for a way we collect a lot of our taxes, speed is of the essence. So if we're filing VAT returns every 2 months, we need to have real time comfort that people are doing the right things around the VAT rules, and if there is some sort of a loophole or there's some sort of way in which people are kind of, I suppose, navigating the rules a little bit funny, we need to be able to figure that out really, really quickly, and AI can certainly help with that. I suppose if I was just to make a closing remark, what I would caution against overall on AI is not to think about it in the sense of how can we regulate AI. So I would think about how can we use it positively for taxpayers, for tax functions, and also for tax administrations. I think that would be my closing remark to the panel.
Thank you very much.
One sentence about open source. We at the Hungarian tax administration use either open source or not open source softwares. The not open source is, for example, SAS or Oracle. And the open source is like Python libraries like scikit-learn or PyTorch. And believe me, we know the same information about the open source as the not open source, because we don't have the resources. We are not an IT company. We don't have the resources to analyze the open source repository of those softwares. So it means us that if someone finds an error in the source code, then that programmer can be famous for 15 minutes if they publish it, and we can rely on it maybe, but that's all from my side. About VAT fraud. The big problem is not that we don't collect the VAT on a reverse form. So I don't think it would work, because then we withdraw a lot of money from the economy, and it simply won't work. The problem is that we do not collect the data. 3 or 4 member states are collecting invoice level data. In the whole union, Italy, Spain, Hungary, and maybe there are some more initiatives. And we even do not collect invoice level data on intra-community fraud that is free of VAT. So it's crazy. And we let all those fraudster networks 5 more years to thrive until this will be mandatory to collect those data in the VIDA. I'm very happy that we started it. I'm really happy. But it's believe me that this is definitely a problem. And it's another problem on the domestic level as well. We should follow the graphs, the networks of the invoice sequences, and find the positive circles, the rotations, the positive rotations, and we simply cannot do. And I'm very upset because we have a detailed analysis model for it, and we know that there are a lot of leakages. Those member states who don't have that data, they have some more years to sleep well.
Thank you very much. Daniel, 2 minutes or less.
2 minutes or less. Thank you, Rebecca. Thanks for these questions. I would like to pick up on 2 of them. One is about data regulation, and the other one is about fighting tax evasion and lessons from that. So on data regulation and ownership of data, biometrical data, other kinds of data, this is an area when it comes to understanding AI where perhaps tax policy is not the prime target. If we think about Occam's razor, so using policy as most directly as possible, I think instead other kinds of regulatory measures to secure private ownership on certain assets can be used. And here I also think that, for example, when it comes to dominance in certain markets, instead of trying to break up profitable, successful companies that have become excessively big, making excess profits or whatever that is, thinking about data regulation and entry regulation, increasing competitive pressure and newcomers so that we get more dynamism rather than breaking up successful companies that make profits and make value. The other one on tax evasion, the other question, here I want to talk a little bit about Sweden. Whenever I am in Sweden, I'm very critical about the system and criticizing everything. But whenever I go abroad, I become the biggest system lover and Sweden lover. What we have is a system of identifying numbers for individuals and also for firms. This is what Ferenc would talk about not as data, not AI, but simply raw data, allowing us to combine information about wage income, transfers, maybe if you are sick or have other kinds of, and then that allows us to at least make sure that we do not make too much of wrong payments of transfers and so on, and people know about this, and I think that's a nice threshold for them before they thinking even about becoming tax evaders. And I think this is simply data and in its purest form and about individual information numbers and so on. So that is working in Sweden at least.
Thank you. And what a great way to bring it back to data and the real human beings behind that data, who we all are and walk among. Thank you to our interpreters. Thank you to our terrific panel and to you for your questions. And now I hand it over to Gerassimos and Pasquale. Thanks, guys.
Thank you all very much. Thank you, Rebecca, for leading us not only firmly, but on time. Great. So, ladies and gentlemen, indeed, we're now going to discuss the takeaway points of this full day that we've just been through. And to do so, I'd like to welcome back Pasquale Tridico, member of the European Parliament and chair of the Subcommittee on Taxation.
Thank you to everybody. Thank you to the resistance of this very long day. It was very nice to have all of you here. And let me say some final words on this conference, which was a very good event, in fact. Well, I would like to start from a quotation, which is the following. One of the most important failures of capitalism is actually the inability to reach full employment and to have an equal distribution of resources based on fairness. Well, this was Keynes in 1936. Now, we went through very important sessions. One of these was exactly dealing on wealth and taxation. A second one was on competitiveness and sustainability. A third one was on reform at EU and international level of taxation. A fourth one, just now, was on the new challenge of artificial intelligence taxation. Very nice things emerged from this session today, both from an academic point of view, but as well from a policy point of view. Starting from the beginning, the first session emerged the need. I would say there is an important consensus here, and probably as well in the Parliament, of an action to make some remedy against the huge inequality which is increasing. Polarization, fragmentation are basically undermining the cohesion of the society. You know, wages and income we teach at the university are basically retributed according to labor productivity. But you know, some incomes are so huge which have no justification of labor productivity behind. And the justification comes from basically being monopolists, being oligopolists, being in dominant position, taking exploitation of rents. Well, this is not what even liberal economy thinks about a good and appropriate retribution, compensation of income based on labor productivity. That's why taxation is important. That's why policy is important, exactly to pose some remedies to this discrepancy which undermine our economy. And here comes the proposal from Zuckman at the EU Observatory today. It's a proposal which does not ask people to pay more than what they already pay. It's a proposal which asks the minimum to put individuals, which behave actually like multinational, on a right track of progressivity as our constitution in European member states ask for. Actually, today, at the top of the income, in the income distribution, there is a regressivity which comes, at least in the last percentile. And there we need to put a remedy with the proposal of a 3% of tax on wealth above 100 million euro, which is a lot, in fact. We discussed then on competitiveness and on sustainability. Let me say 2 words before that, before going in the issue of competitiveness. We know somehow that we lack competitiveness in Europe, yeah? There were reports in the last months by Letta, by Draghi, which underline that. However, probably I will tell you something different today. In the last 30 years, there was a huge amount of innovation in our economy. We do not see this innovation in standard data of productivity. You know, if you look at our life today, your life today is much better than 30 years ago. Today, labor productivity, however, is stagnating in most of European countries. We do not measure labor productivity correctly. We are surrounded by mobile, by tools, innovative tools, artificial intelligence even. We see, as Robert Solow was saying some years ago, we see labor productivity everywhere, apart from the data. We see in our computer, we see in our tools, and we see in our better life, actually. Most of us, not all, of course. So, what I'm going to say here, there is even a problem of measurement of labor productivity when new technology comes at stake. With new artificial intelligence, automatization, our life improved, our time spent at work reduced. But still, we do not see this labor productivity increasing. And this comes, gives us the idea that it actually quite holds of the fact that GDP probably is not the best way we measure our wealth. But let me go, this is just a point of reflection, but let me go ahead on the international and European reform, which is important as well. The idea of reforming our system is consistent with Pillar 1 and Pillar 2, has to be consistent as well with international with other players at United Nations level. And I'm happy that Oxford, the Commissioner today, affirmed the need for us to go ahead with global minimum taxation and to be strong enough to implement as well Pillar 1. You know, if we abandon Pillar 1, each member state will do it themselves in a very fragmented way. It is even worse, even for our friends on the other side of the ocean, which do not want probably Pillar 1. Last but not least, artificial intelligence. Here there is the new challenge which we need to face. And if we face in a correct way, pushing, of course, innovation, which cannot be obstaculated. We don't want to create obstacle to innovation, but we want that new factor of production, data which generate income, need to be considered as factor of production. Today, when a user and a company trade data, there is a transaction there. When we buy water, for instance, there is a transaction, and we pay taxes for that. Huge companies do not pay taxes for buying data, actually for getting data. If we understand that, probably even the way to understand better the impact of artificial intelligence on income will be better understood, and we realize which source of income we need to tax. I want to finish this talk with the words of Pope Francis today. In the encyclica Fratelli Tutti, he said that capitalism creates waste, residuals, waste. The state and the welfare state is exactly there to mitigate this waste, and the need for a minimum income, for instance, the need for a welfare state, the need for appropriate income for all, it is exactly what comes after distribution of resources created through taxation and supporting our welfare state. I finish here my talk, and I would say thank you, and now I have to read, in fact, I have to say thank you to all those people who worked for the symposium. Well, I will not mention the names, as it was suggested, but just not to be fair for everybody, but I would like to at least to mention the institution which worked on this symposium. Colleagues from DG Taxud, the National Parliament unit here, the Conference Coordination Unit, the Protocol Unit, the technician, the interpreter, who are basically at 6 o'clock need to finish, so I'm really sorry if I take you some time more, the usher, the security unit, and finally, last but not least, all the people at the FISC Secretariat, including the trainee who were working here. Thank you to all of you for being here all day. Thank you.
Thank you. And final word then to you, Mr. Gerassimos Thomas, Director General for Taxation and Customs Union.
Thank you very much. Thank you. And I will not keep you long. I will not summarize the substance. I think we had a very rich debate. Pasquale Tridico, as chair of the committee, he gave his political interpretation. I feel that the introduction of Wopke Hoekstra covered actually all the aspects discussed. I will give a more light touch. I think every time I try to have a favored first-time party speaker, because we bring new speakers every time. So I think for me today the favorite first-time speaker is Gemma, who was in the last, because she said, let's be positive about what we do in Europe. Then I will have what are the favorite persistent supporters of this initiative, and it is for sure Vitor and Matthias Gorman, who have been here for 3 times, and they actually give their analysis and their support to this persistent discussion about taxation. I think when we launched the Tax Symposium the first time 3 years ago, we focused on this tax mix for 2050. We tried to give to the tax people some longer-term perspective. I'm sorry to say tax people are usually short-term. So, and I think in this symposium, as you all ask us to be self-critical, we were a bit less aspirational about the 2050 than we were in the first 2 times. And I think because of the geopolitical events, we were drawn into discussing more the management of the short term. And I think this is not a bad thing, it's just I'm taking the fact, and I hope that next year, and Pasquale, who is the first time co-organizer here, committed that we will do it again next year. I think we need to give some emphasis to the longer term. I think what I am very happy about is that the core of this day of the symposium is that to involve the national parliaments and the parliament, and this support from the national parliament was stronger than in the previous time. So I want to thank all the national MPs, and including my own co-nationals, which, they were very emotional about this, but all the national parliamentarians. It's very important. The law, the tax law, and the complication of it is made in Brussels, in national parliaments, at local level, at tax administration. So the good and the bad things. Third, I think I want to take what we took out of this symposium in all 4 panels. I would say all the problems that came up, they need a process. This process, whether it is to tax high net worth individuals, whether it is about reforming the corporate taxes, whether it is to look at taxation and do competitiveness, whether it is to solve revenue issues, we need a process. And to have the process, we need people. So we need the people of DigiTaxud, all my colleagues, not the ones only who made this conference. We need the people in the Fees Committee and the assistants of parliamentarians who do the resolutions. We need the assistants of the national parliamentarians who do the lawmaking. So we will not achieve any results if we do not have a process. This is about the government. And we need the participation of the stakeholders. You all participated here, there, some of you didn't speak, but I think this process of mixing with the private sector, mixing the different levels of government, meeting the stakeholders, the NGOs, all the civil society is important. So, I dedicate this to the further consultation across all of us, because we cannot do it alone. We need to work together, and therefore I want to thank all of you for participating, and I want to thank all of us, the colleagues, the people that will be involved in making better tax laws over the next year, and not only for this conference. Thank you very much.
This concludes a very full day. I'm sure you're all going home with a lot of food for thought, and we'll all be watching very closely how taxation policy unrolls between now and next year for the next edition of the Taxation Symposium. I'd indeed like to join in the thanks, not only to all of you for joining us today, but for those of you who are following us online. Indeed, our interpreters very kindly agreed to stay a little bit longer to interpret the final contributions. Of course, our tech team, everything went smoothly. We had no water disruption this time. For those of you who were here last time, we had some water problems and electricity cuts, so that didn't happen today. We were lucky. Thanks for taking us safely through the day. And we'll now invite you to a cocktail reception, and you have people outside to guide you and also signposts so that you know where to go. Have a very safe trip home, whether you're traveling near or far. And I'd like now to invite everybody who was part of the organization of this event for a family photograph here on stage. And that does include the ushers and the tech team and everybody else from the Parliament and the Commission. So please join us here for a family photo. Have a very nice evening. Bye-bye.